If you're evaluating Mexico as a manufacturing location, understanding the IMMEX program is non-negotiable. It's one of the most powerful incentives Mexico offers for foreign manufacturers, but it's also one of the most misunderstood. Today, we're going to clear up exactly how it works and why it matters for your cost structure, compliance, and competitiveness. The IMMEX program, or Industria Manufacturera, Maquiladora y de Servicios de Exportación, is Mexico's export promotion program. Implemented by the Mexican Tax Authority, IMMEX allows you to import raw materials and components into Mexico, use them in manufacturing, re-export finished goods with special incentives. Most importantly, under IMMEX, VAT is exempted on qualified imports, customs duties can be deferred or eliminated if re-exported. This is not a tax loophole. It's a legally sanctioned export incentive used by thousands of manufacturers in Mexico today. VAT, value-added tax, in Mexico is typically 16% on local purchases and nationalized imports. Without the IMMEX, every component you import would trigger VAT, and reclaiming it would take months. Under IMMEX, VAT on imported inputs becomes fully exempt. VAT on exports is zero-rated. VAT refund cycles also become much shorter. In practice, the VAT exemption can improve cash flow by millions of dollars in a single year, especially for high-value materials. This incentive alone is often one of the most financially impactful reasons manufacturers choose Mexico. A cornerstone of IMMEX is the temporary import regime. This means materials enter into Mexico VAT-free, they're used in production, and then final products are re-exported. As long as the materials do not stay in Mexico as finished goods for local sales, they remain under the temporary import benefit. To qualify, you must maintain detailed inventory control, maintain detailed BOMs, and you have to report to the Mexican authorities everything that you're sending back out of the country. So the IMMEX program, in summary, reduces your duty exposure and improves your global competitiveness. IMMEX is powerful, but it comes with obligations. Your company must file monthly customs declarations, maintain precise inventory tracking, Annex 24 and 31, report import versus export flow every month, respond to audits, and maintain accounting and payroll compliance. In Mexico, proper IMMEX compliance is not optional, it's enforced. Penalties for non-compliance can include fines, suspension of your IMMEX program, VAT, and duty reassessment. This is why many companies choose to structure through a shelter provider to minimize compliance risk while establishing operations. Let's clear up the top misconceptions about IMMEX. First, that IMMEX exempts all taxes. It's false. VAT can be exempted, but income tax still applies. Second, that IMMEX guarantees duties are always waived. False. Only if materials qualified and are re-exported as required. Third, once approved, compliance is automatic. No. Authorities expect monthly compliance and documentation, and true tax advantage comes not just from approval, but from ongoing precise execution. Both shelter and standalone entities can hold IMMEX programs, provided they meet their requirements. That's why IMMEX is not a legal benefit, it's a strategic tool for global manufacturers. So what does this mean for you? If you're evaluating Mexico, understanding IMMEX is not optional. It's a core part of the financial and compliance case. When used correctly, your cash flow improves, your VAT exposure decreases significantly, your duty exposure is also reduced, and your supply chain becomes more efficient. In our next video, we'll compare the business implications of shelter versus standalone under the IMMEX program, and why many first-time expansions start with a shelter partnership. If you'd like a customized IMMEX cost analysis for your project, let's connect.